Hi everyone. Today I will make a brief presentation on Economic Survey 2024-25 and India Union Budget 2025-26. Normally the presentation on these two topics will be slightly boring. So I will try to make it slightly more interesting by giving only the highlights of these two Economic Survey and Union Budget. Economic Survey says that the first of GDP growth for financial year 25 is at 6%. This has come down from a level of 8.2% for first half of financial year 24. The major reason for this slowdown is reduced government expenditure in infrastructure due to general election in May 2024, reduced investment in residential properties by households, and reduced private sector investment. Apart from these observations, economic survey has made three very interesting observations. One is it says that the investment in research and development activities in India is very low. India accounts for only 0.64% as a percentage of its GDP. Whereas if you take countries like USA, China, Canada, Australia, UK and most of the European countries, it is above 2%. For example, if you take USA, it is 3.4%. The investment, R&D investment in industrial sector is very low. The major share of this investment in R&D comes from IT, pharma, transportation, biotechnology. Again, the major source of funding is government entities. So economic survey says that India private sector has to gear up for more investment in research and development if we really want to create global companies. The second important observation is the nominal GDP of India has grown by almost 12.4% for the last 30 years. And International Monetary Fund says that for next 5 years, our GDP will grow at an annual growth rate of around 10.7%. It is very surprising that NSE 500 has given a compounded annual growth return of around 12.4% for last 30 years. So I don't think our equity market has generated any abnormal return. The third interesting observation is it says that the corporate profitability is touching its all-time high for last 15 years. The NSE 500 companies' total profit as a percentage of GDP was around 2% during 2003, and for 2024 it has gone as high as 4.8%. But whereas the wage increase has not been commensurate with the increase in the profit, so it asks for corporates to be more liberal in paying the wages. Now coming to Union Budget 2025-26, increasing the income tax exemption limit from 7 lakhs to 12 lakhs is the master stroke of this budget. This means that monthly income of rupees 1 lakh is tax free. Of course, there is also standard deduction of rupees 75,000. So I call this as a magic budget. This delivers higher disposable income in the hands of the citizens, higher capital expenditure to GDP ratio of 3.1%, lower subsidy to GDP ratio of 1.19%, and still maintaining the fiscal consolidation. The fiscal deficit is budgeted at 4.4%. Government wants higher economic growth through higher consumption expenditure, higher capital expenditure from the government, and higher private sector investment. So I can say this budget powers the economy with triple engine: higher consumption expenditure, higher capital expenditure in infrastructure, and higher private sector investment. Nominal GDP size for financial year 25-26 projected to be at 356 lakhs 97,923 crore, registering a growth of 10.1% over the previous year. The real GDP growth for financial year 25-26 is projected to be between 6.3 to 6.9%. 8%. The fiscal deficit is budgeted at 4.4%, and for last year it has been revised to 4.8%. The gross market borrowing is at 14 lakhs 82,000 crore, and the net market borrowing is around 11 lakhs 53,000 crore. The tax to GDP ratio for financial year 25-26 is budgeted at 11.96, slightly higher than what it was for financial year 24-25, which was at 11.88%. Thank you. I hope you enjoyed this brief budget presentation.